Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is No Donation Friday. Today, we're going to look at a few markets. We should call it Big Tech Friday. There's some good stuff going on in the US 100. It's up about 1.75%. OpenAI dropped their latest version of ChatGPT. That thing is a monster. I'm going to be demoing that over the weekend, and I'll probably get back to you for sure on Monday with a little bit of what this thing can do coding-wise. Right now, I'm looking at really a 1 minute chart on this NQ. The NQ 1 minute, we've got a crossover. 920 EMA crossover. If you're not familiar with that strategy, you can go ahead and check that out over on the How to Trade YouTube channel. But you see we got the crossover right there. Sort of a tough trade to take, though, on this time frame because of the location of it on the RSI, which is right around 50. However, we are sort of creeping a little bit higher. I think taking bullish trades in this type of environment is probably a pretty good move, and you can see this one's rolling north by just a little bit. We're rocking 2 lots here. Got a little bit better than a 1-to-1 risk versus reward. I think your stop loss is probably going to be in pretty good shape right down there, but you can see now we're really getting the bullish bump, and there's been a lot going on with regards to OpenAI, what's happening in big tech. I'm very surprised that we didn't see a bigger pullback in the Nasdaq, especially after all the helium problems, the energy issues out of not just the UAE but the Persian Gulf region in general. We really thought we'd see a pullback in AI technology. It's just not happening. AI is driving the Nasdaq, and right now the Nasdaq's gearing up for probably a couple of the largest IPOs that we've ever seen. And I'm going to go ahead and go over those in just a second, because as we come into the spring and summer months, I won't say that it's IPO season necessarily. We haven't had really a high-profile IPO like we're going to be talking about today in a long time, but we do have to take a look at the prospects of OpenAI and what exactly the markets are expecting to do. So this was an interesting trade to me. I executed it shortly before we came on, about 1 minute. Remember, these are demo dollars. I don't want anybody chasing and following along with these trades. These are done for instructional purposes only, but the 920 EMA crossover is a really strong strategy. It's something that I'm working with AI right now. I'm doing some back testing. I don't know about how to release the content necessarily, because I'm not a signal provider, and I don't want to just put together a black box system and just send it out to the masses. I don't think that that's a good idea. That's really not what I want to do. But I do see some potential in this type of strategy. 1 minute chart, a little bit tougher, but boy, when you look at the 920 EMA as a swing trade though, 4-hour charts, daily charts, especially for the Forex and those metals, the spot metals pairs, it's pretty good stuff. So as you can see, this is what it's all about. Essentially, you go up and then you come down. I still like the bullish side of this trade. I think it has a pretty good opportunity to succeed. As far as, my profit target, where should my profit target be on a 9 to 20? Well, I mean, a lot of folks would be just shooting for the top of market structure right there, right around 27,430, somewhere in there on that 1 minute chart. I think that's reasonable. I think that you could definitely get a big breakout here though, and maybe even run it really up around 27,000 today, 27.5 on the Nasdaq. Really is bullish. Do you time it perfectly on a 1 minute chart? The biggest thing you have to remember is manage your risk in your position. 1 to 3% on any given trade. Stop loss is right down beneath this swing low. If you wanted to extend it, you certainly could and just take a position here for the rest of the day. To me, I would be very, very careful with how far I got exposed, especially on a Friday going into the late session. So we'll go ahead and let that one simmer for a while. I don't know what's going to happen with that trade. Looked pretty good early, up about $600 or $700 on 2 lots. That's not bad. Now you're right back down around break even. Welcome to futures trading. NQ Futures. All right, so it's good to see everybody back in the room out there in YouTube land. 512 Eli, bull day, absolutely. Yeah, we're going to take a look at the macro technicals for the NQ, not just 1 minute crossovers. I thought we'd execute one of those just for fun to see how it went. Let me see, Freckleface, hello. Hello, Freckle, how are you? I'm doing very well here in Montana. On the beach this time last week down in Florida. Came home, it's snowing today. We had about 2 inches of snow on the ground, so wow, incredible switch in climate. It's funny too, because when you go from a climate that it's that warm and sunny and you're at sea level, and then you come back up here to about a mile high above sea level and it's cold, man, you get hungry. I feel like I've been eating all day. That's for sure. Jason Max, good to see you, Jason. Welcome. Freckle, do you offer one-on-ones? You can go through switch markets and go ahead and contact. Actually, I'll show you exactly if you're interested in one-on-ones. You got switch markets right here if you want to trade anything that we talk about today or any of the ideas or any of the markets that we cover. Go ahead and hit this one up, switchmarkets.com. I'll get you up and running. And if you're interested in maybe scheduling a one-to-one, I do have a few slots open here and there. So the best thing to do would be just click on that chat bubble over at Switch. You can go ahead and chat with them, and they can give you my Calendly link, and then you can go ahead and see if you can schedule see if you can schedule a time slot that works for you. So if you're interested in a one-on-one, I don't have very many slots open. I spoke with a trader earlier today from Dubai. The gentleman had an automated systems that he was running. He had some questions on those. So if you're interested in something like that, reach out to the customer service at Switch. They'll give you my Calendly link, and then you can go ahead and click and maybe get a time slot. Like I said, I don't have very many time slots open, but if you get one, I'm more than happy to sit down and talk. That's for sure. Let me see. Blue Trader, hi from Spain. Good to see you, Blue. I've never been to Spain. I heard it's nice, though. Let's see. Absolutely, Freckle. Okay, guys, over in the How to Trade community, good to see the crews in the house. Tuka, good to see you. Andrea Garwal, always a pleasure, Andrea. Bobby Bob, Ralph H., good to see you guys. If you have any questions or markets you'd like me to look at, go ahead and let me know. We had a long discussion yesterday on the Australian dollar Kiwi. This one is interesting to me. I think you guys hit on something when you asked about this, because I don't typically look at this pair. But it's a great pair to look at, especially if you're looking for diversification away from the U.S. dollar. I talk to traders all the time, and they go, okay, I'm trading. I go, what are you trading? First question I always ask, what are you trading? Well, I'm trading the Japanese yen, U.S. dollar, Great Britain pound, Euro USD. And I go, well, you're really, hyper exposed to the U.S. dollar. Pairs like this, these cross pairs that don't involve the USD, at least directly, you got an opportunity to make some unique trades and diversify your holdings. And I'm a big fan of diversification. I think that when you spread your risk out over a number of assets and maybe even over a number of strategies, you've got a much better opportunity to succeed over the long term. Remember, you don't want to load up in everything on one market or one asset. And if you're trading a bunch of different majors and the USD does something it shouldn't do, more than likely you're going to lose a lot of those trades. Or even worse, you're going to win some and lose some and just get out at a net even. We're not interested in being net even. That's called being a commissions trader, when you don't win and you don't lose, but you're always right around zero. It's a commissions trader. We don't want to be commissions traders. We want to make money. One of the largest, I would say, reprimands I ever got was after a month. I traded a month right after I began trading for the 7V Bar Trading Group. My uncle was the boss, and he took me in after a March. He said, okay, you made $50. You sat here all month. You're a commissions trader. I fire commissions traders. And I go, what is a commissions trader? He goes, you don't win and you don't lose. All you're doing is generating commissions for the broker. You need to be making money and putting it in your pocket. If you can't do that, you got to go. So when we talk about not being a commissions trader, we're either making money or losing money, but we're giving ourselves a chance to make the money. And when you diversify your holdings and spread out, maybe choose some indices, maybe choose a commodity or two, maybe choose a USD and maybe some cross pairs, hey, maybe even a few exotics, then you got an opportunity, a better chance to succeed, as opposed to just betting the ranch on the USD every single day. That's my opinion. It's pretty solid, though. Diversification can help you. That's for sure. Now, Australian dollar NZD, we're right up there around a key level. The key level is 122. Clearly, that's where the battle's being fought. I'm watching this level actually relatively closely. I like what's happening here. I don't usually revise a cup with the handle. Typically, I think that when a cup of the handle reverses on you, it doesn't really matter anymore. But this looks to me like something's cooking, and I like it. I really like what's going on here with the price action. Daily chart, one of my go-tos for Forex pairs. I really like the daily and the 4-hour chart. The tighter time frames can be really tricky. Make sure that you're trading tight time frames when the markets are at their most active. So for this pair, it really would depend. Probably, I would say during the definitely be watching that Australian Open. I'm going to go ahead and extend my handle, maybe something like that. It's not a great handle. It's not the prettiest handle in the world, but it doesn't have to be. What we're interested in is catching a breakout essentially above that 122 level. So this is interesting because we could play a breakout right now. We could buy the market right now. I wouldn't mind that. I really wouldn't. You could buy it right now and look for a run at 122 and maybe a breakout up over that zone. The problem with taking it right this minute is we've got the weekend break coming up. We've got the Australian dollar highly correlated to gold. Typically, gold does something over the weekend. It hasn't really lately, but right now, gold market, we're going to cover that in just a little bit, up 0.75%. If gold does break out and rally, then yeah, we will see a breakout in this pair up above 122. A little bit riskier, what I would like to do, perfect world, my wish list, I would love to see us break above 122 and then pull back down in here, and then maybe we could get the bid, something like that. We haven't broken that 122 level. That does put me off a little bit. That tells me that there's significant sellers there. But once that liquidity is gone, once that short side liquidity is gone at 122, then we'll have a chance to get this breakout. And this formation, it's setting up. So I want to thank you guys for putting the Australian dollar Kiwi on my radar. I think it's going to be potentially a very nice breakout up over 122. I don't see gold really selling off in a big way. I think I think the bears are getting ready to lose the gold battle. I really do. I expect us to go up and check out 5,000 relatively soon, probably early May. That would be my guess. But we're going to be in it. We're in this market. We're watching gold. We're watching the Aussie. And I think it's a pretty good area to be trading. Okay, let's take a look at a couple of our trade ideas. Actually, just one trade idea. I put this one out earlier today, and this is just a very basic, simple play. It's a sell, not a signal, but a sell trade idea in the U.S. dollar, Canadian dollar. I think that if we get an opportunity to sell this level in the next few days, it could be very good. So we're looking to sell right up underneath 137.25, that quarter handle at 38%. I love that. I think that's pretty good stuff. And then right there, there's your level. Nice daily, beautiful market structure. Fantastic market structure. Spike high here, right down to that low that developed on the 21st of April. There's your rally, 137.25. I love it. I love it when a plan comes together. 38% lands on 137.25. I love quarter handles, 137.25. I like anyways. But the beauty of this one is we've got that 13-day EMA coming right down on top of the 38%, and you're right there at 137.28. So if I was picking a major, maybe a level to trade out of the majors, that would be it. I think that's a pretty strong trade. Today we've traded down to about 136.71, so we're only about 50 pips away. We have an opportunity to get that one early next week. I would have loved to have got it earlier today. I thought we were too. 137.14, our entry point somewhere right around 20, 23, I believe it is. If we would have got that sweet hit right there, then we would have been out. But let's go ahead and just wait. Let's watch and wait and see how this develops. The Canadian dollar starting to gain a little bit of ground on the USD, and the reason why is WTI crude oil is trading at about 93.50 going into the weekend. It's off a little bit today. Stocks are up a little bit. The Dow is really the laggard, but as far as crude oil's down. Fascinating. Crude oil would be down going into the weekend. Is there a peace deal coming out of the Middle East? Maybe. Let me see. Yeah, good to see you, Blue. Babji is good to see you. Hey, Shane. Yeah, how you doing, Bab? I'm doing very well here. Eli, your uncle was solid. My uncle was he was something, boy. When it came to trading, he knew the business, and it came from being on Wall Street. It came from, developing the chops back in the 1980s and graduated, and actually was an upstairs trader, set up the trading desk for Shell Oil. Was really a guy that was on the ground floor of the oil commodities trade, the futures trade, and built it into being a significant player on Wall Street. And so I always found that when those guys talked, if you had an opportunity to listen, you listened. And so I took as much knowledge as I possibly could by just listening and saying, okay, what exactly do you need to do to be around in these markets? He was solid. A couple other guys I worked with were pit traders. They were solid. And the stories, they should write a book. They should write a book because it was an opportunity. What the trading pits were and what the markets really are today is they're an opportunity for folks to level up in life. I've always been a competitor. I've never just wanted to settle. I've always wanted to strive and move up. And I'm 40. I'll be 47 years old in June. That hasn't changed. That goes back to me being a college baseball player and always wanting to compete. And sports was one thing, but to get into the markets, this is where the competition is happening. We have to know how to play, though. You can't just go in there and be strong and have the desire and say, okay, I'm going to beat these markets, because it doesn't work that way. You have to know when to hold them, when to fold them, like the old Kenny Rogers song. Know when to hold them, know when to fold them, but you also have to know which games to play and when to play them. And if you can do that, if you can figure out when to trade and what to trade, you're in great shape. That's why we started off with that US 100. That's why we looked at that Australian dollar Kiwi. This one's on our radar now. We are watching this setup. The longer this trades and tests that 122 level, the more we start to think that a breakout's coming. It looks to me like it's on the way, maybe a third test, maybe a fourth test, but the breakout will come. But you can't really go long now, because if you do get that big reversal, we might be holding 120s down here waiting for us to break 122. The inflection point's 122, and my idea is that by waiting and being patient and strategizing, we're going to beat everybody at 122. That's where the competitive nature comes in. By beating everybody, we're going to take our money, and as long as we hit our profits, make a little bit of money out of it, take what we want out of it, then we won. Let the big guys worry about whether this market's going to 125 or pulling back to 120. If we handle ourselves in the appropriate fashion, right around 120, 122, then we have an incredible chance to profit from that trade. Same with the dollar CAD. Do we sell right now? Not interested. If this market sort of messes around in the next few days, maybe we get a shot at that 137.25. Love it. Would absolutely love it. If we don't get it, we don't get it. We come back and fight another day. So that's what it's all about. Competition, having that competitive edge. A lot of you have it. A lot of you are hyper competitive like me. But my uncle, Gary Vernier, he was he took competitive to the next level. Didn't matter what we were doing. He wanted to win. So that's just that's part of my nature, and I learned as much as I could from those guys, that's for sure. Let me see, Uncle Scrooge McDuck, pretty much. Eli, I wish I had a family member like that. Well, it was very instructive. It gave me a leg up on a lot of things. We could sit there and read books. We could sit there and work on demo. But when you have somebody that's made it happen, then you say, okay, well, this is possible. And that's the first barrier that a lot of you have to overcome, is you have to realize that, yes, it is possible. And that's hard. That's hard after you have a bad month or a bad year. You question yourself all the time. Says, am I even doing the right thing? Or should I go back to school and be a doctor or something? One thing's for sure, there's a lot of money flying around these days. And if you get in at the right time in these markets, you can make a lot. There's no question about it. No question about it. All right, let's see. Eli, we have 2 ears and 2 eyes. Got to use them twice as much. Yeah, there you go. That's what it's all about. Just be aware. Be aware of what you're doing in there. Manage your risk aggressively. Understand that you don't have to make a great trade every time. Make all the trades you should make and a few good ones, and then you're a great trader. That's it. Make all the trades you should make. Whether it's your strategy, no matter what your system is, what your strategy is, stick to it. Be disciplined. Understand what you need to do to succeed. That's all. That's really all there is to it, that's for sure. All right, we had a few things on the board here for this week. Really, today was No Donation Friday. We'll talk about the psychology behind that probably next week, because there are a few things out today that are fascinating. We're going to go ahead and go over them right now. The news of the day, the consumer sentiment numbers came out, and they are bad. There's no two ways about it. I mean, these are really bad numbers. This suggests that the U.S. Consumer is sort of, I would say, in a state of flux. They're in a state of flux. They don't really know what's coming our way. The long-term inflation that's developed since COVID-19 has really hurt a lot of people. And I can tell you firsthand that I always get into the mode of working in my office and getting after it, and the idea that money's coming in, and you go on vacation for a few days, and then the money's always going out when you're on vacation, and it changes everything. It changes everything. And that, for me, you start to really see how much things cost when you get out of your own not sphere of influence, but your own environment. When you go to a different environment, you start to see exactly how much things cost. And that's what's really burying consumer sentiment. It's in long-term inflation. No question about it. Also, the Iran war has not helped because gas prices are up. But take a good look at this one. Michigan consumer sentiment for April, 49.8. That's well above expectations of 47.6 and 53.3. So what does this exactly mean? Well, here it is. It means something really bad. University of Michigan's consumer sentiment was revised up to 49.8 in April from an initial estimate of 47. Despite the slight improvement, this remains the weakest reading on record, reflecting the heavy toll of the Iran conflict on consumer morale. Sentiment declined across all demographics, regardless of political affiliation, income, age, or education. That's not good, because when consumers lose sentiment, when we go bearish in our sentiment, then all of a sudden our spending stops. And when our spending stops, you see an economic contraction. Why are the markets moving higher? Well, because maybe none of that matters anymore. We are in the age of AI. But as far as the people, the nuts and bolts, mainstream America, this does not look very good. This is the chart I come back to. Not enough people are showing this chart. This chart right here needs to be on CNBC. They need to be talking about it, what exactly COVID-19 and the shutdown meant to everything. It really impacted us in ways that we understand, in ways that we don't even see. And it was going to take years for us to understand the full ramifications of this. And take a look at what you have here. Your sentiment levels before 2020 were extremely high. They were up at 95, 97, and then COVID, right here, COVID shut down, and then people were like, oh, no, what's going on? The world's ending. And then you got the build back. All of a sudden, okay, we're back. We're going to reopen. We're going to be back in business. And then what happened? Then the inflation started. The prices on everything went up. Prices on houses went up. Prices on cars went up. Prices on food went up. Everything started going up right in here. And then we started building back in 23 and 24. Okay, we're going to have a chance here. Maybe the inflation's going to let us out. Nope. Inflation persists, and sentiment just keeps getting worse and worse and worse. That is a recipe for disaster when it comes to economics. That right there is the precursor to a recession, and probably a big one. Now, do I believe the consumer sentiment number is gospel? No, I don't. I don't think that it's the end all be all when it comes to when it comes to market dynamics. But what I do know is when people don't want to spend their money, you see an economic contraction. That's really all there is to it. So sentiment, it's one of those things you need to be watching. Not religiously, but you need to be watching it just a little bit, because when we look at these numbers and we say, okay, what do they mean? Well, they mean that we could be headed for an economic contraction. Now, here's where things are going to get a little bit difficult for us. Does that mean that the markets are going to go down? No, it's not. Let's see where our stop loss got hit. Yep, welcome to systems trading right there. Nice big rally, stagnate, bam, knocked us out. Remember, 920 EMA crossovers, short-term strategies on 1-minute charts. It's all about your risk management. You got to do it. You actually have a sell signal set up right there. I would be very careful with that. A lot of times those flatline and get you in real trouble. So here's the US 100. This is what's going on. This is the Nasdaq, the NQ. Up there right around 27,250. A big bullish day today, 1.70%. You can see what has happened really since the end of March. March 31st came around. March was a tough month because it was the onset of the war. The markets do not care. Nasdaq does not care. It doesn't care. It's at all-time highs right now, moving higher, and there's a lot of reasons for that. A lot of reasons for that are the AI boom. Now, this was something that we thought could really suffer because of the Iran war. We thought that helium was going to derail superconductors. We thought that energy was going to be in a real, not necessarily a stalemate, but definitely energy was going to be in question. And the hits keep coming. What we're seeing right now in the artificial intelligence space, the AI space, is a rapid acceleration. And if you guys have ever done any research in this area, the technology curve, I'm sure you've heard of it. Technology curve goes like this, and then it explodes in trajectory because technology sort of breeds technology. Innovation breeds innovation. This GBT 5.5, I'm going to be online with it this weekend. I got a few tasks I want to see if it can do as fast as they say it can, but this is supposed to be the game changer. Now, the thing about 5.5 and OpenAI is OpenAI is going to be launching their IPO. I'm going to talk about that in just a second. But this right here, ChatGPT 5.5, its latest artificial intelligence model, is supposed to be a real banger. This comes after Anthropic unveiled the Claude Mythos preview. But 5.5, and this is the big thing about that technology curve, 5.5 only took 6 weeks to build. We saw 5.4 come out 6 weeks ago. 6 weeks later, you've got the newest version. Now, a lot of people are running complex projects, research projects on this software. I think that if it's as good as they say it is, this is a real game changer, because think about what's happening. Just very briefly, and then we'll get back to levels and things. But think about what's happening here. 6 weeks. It only took 6 weeks, less than 2 months after 5.4, the breakneck pace of development that's driving the AI sector. When's 5.6 going to come out? 4 weeks? When's 5.7? 2 weeks? Is this going to turn into a weekly update where the AI is actually building itself? That's fascinating. And what that's going to drive is, what are these companies worth? OpenAI, Anthropic highlight revenue gains as IPO hype builds. As competing AI giants gear up for IPOs, investor concerns center on how they measure their valuations. What is something like a ChatGPT worth? What is Claude worth? We're going to find out. The IPOs are coming later this year. You can see right here, OpenAI, no data here. We don't have any pricing data. Nobody really knows where it's going to open at. But what we do know is that all this hype and all this AI buzz is driving. It's absolutely 100% driving the US 100. No question about it. No question about it. So when we start thinking about, okay, what are these companies going to do? It's going to be very, very difficult to really understand where we're going financially, where we're going economically. Think about it. Sentiment's at those all-time lows. These markets shouldn't be anywhere near as strong as they are. Markets are pushing all-time highs. Sentiment's at all-time lows. You have an Iran war that a lot of folks believe may be winding down. I'm sort of coming around to thinking this thing's going to be over here in the next month. You've got a war, consumer sentiment's at all-time lows. Your markets are pushing all-time highs. We're starting to really see that disconnect. We're seeing the disconnect between what AI is going to be able to bring to the world, not just from a production standpoint, but maybe from a cultural standpoint, into what the people think of it. And sentiment, morale's low. Stock valuations are high. We're really starting to see a divide between Main Street and the financial world. As traders, Does all that really matter? Yeah. We got the question yesterday or 2 days ago, is there a stock market crash is coming? And I go, I don't know. I don't know that, because this chart right here should not happen, especially during a time of war when the building blocks of big tech are under fire. It doesn't matter. The speculative nature of AI is already built in. And where does it go? Where does it go? I won't even venture a guess, because I genuinely do not know. But we do know this. That technology curve goes like this. It takes forever to build the first computer, and then they build the first computer, and then the software gets better, and then you make the internet, and then the internet starts to steep, and then you get AI. Now AI is building AI platforms. This thing is going to turn into something. We won't even be able to recognize AI by this time next year. You won't even recognize it. It's going to look completely different. What is it going to mean? Well, everybody thinks these stocks are going to be worth a hell of a lot of money. We're going to find out. I think that it's going to be a black hole for so much investment capital that it's immeasurable. So, big picture, what should we be looking to do with the US 100? We shouldn't necessarily be sitting around looking for a resistance zone, I'll tell you that. Take a look at your monthly. This is sort of the story of the Nasdaq, and rally, pullback, and then right in here we got cooking, and it's just been tariffs right there, threaten the conductor flow to the Western world, and now what do you have? You're just pushing all-time highs. Is there any place where this thing could stop? Big round numbers. I mean, 30,000. You can look at 30,000 if you want. I just don't think it'll be the top. You may be looking at 50,000. It really does depend. So as a trader, how can I capitalize on all this fundamental stuff? I could show up on the daily, and I'd say, okay, 30-minute chart, break it down for me. What do we have cooking here at U.S. session? Right there is pre-session, opening bell, ding, ding in New York. Very choppy, and then we just rally. We go up and take out our highs. If I'm looking for a late day scalp out of the NQ or the US 100, what can we do? Spike low, spike high. I would be looking to buy 38%. No question about it. That's sort of a P formation during the US session. This P formation, bullish compression. So that right in there would be your area. So I would like to hit that probably before this thing closes today, but it would be a very, very short trade. I'm probably looking at the NQ contract. We'll look at that in just a second. Very choppy here, 27,173. I would love to see this 13-period EMA just roll right up in there and maybe get a trade in another hour or so. That'd be beautiful. I mean, you really couldn't draw it up any better than that. Here's your NQ. This would be your E-mini Nasdaq Futures, June 2026. This be where the volume is at, no kidding. Right there, spike high, same basic chart, guys. US 100 sort of tracks the Nasdaq and the NQ right there. A little bit more difference between our 13-period EMA, 27,316. I'd be looking at that 38% relatively closely. To execute that trade, let's go to an order, buy, limit. Probably just be looking at a 2-lot, something right in here, right up above that. There it is. That would be the trade. And that would stay valid right up until probably 10 minutes before the market close, which would be about 3:50 Eastern. And then also, if in fact this top gets blown off, then we have to readjust our Fibonacci's. But right here, this would probably be the trade I'm looking for. As far as the take profit goes, the NASDAQ is so volatile. These NQ futures are so volatile. Actually, a little bit slower right now, that's new. Usually this thing's flying all over the charts, flying all over the DOM. But maybe a take profit of, I don't know, something like that. Maybe just a few points. Looking at, I don't know, something like that would be pretty good. Sort of a tight trade, maybe 4 points. 16 ticks, something like that. Not a bad trade. Pretty good scalp if we get an opportunity to get it. We'll wait. We'll monitor it and see if we can actually get that done. All right, let's see here. BabG's, is it just me, or do I see more correlation between the SPY and the NAS than with the ES and the Dow? The Dow is the one that's sort of left out in the cold right now. When we're looking at the Dow Jones, I mean, here's a good look at just the index, the raw index, Dow Jones Industrial Average, sort of dead today. I mean, down a little bit, down about a quarter point. But the biggest thing you would say here is you'd say, okay, here's your Dow. Still bullish, putting on a bullish show throughout April. Okay, that's great. Take a look at your S&P 500. What's the difference? It's pretty obvious, right? The other two are pushing all-time highs. The Dow, not so much. All-time high, 50,512. I would definitely have an eye on that value area right up there. And this is just the raw index. We'll take a look at the US 30 here in a second, but that right there, that's your zone. They would call that your liquidity sweep right up there. That's where the sellers step up and just absolutely bury the market, right? Came online right at 50,000. We had a trade idea that was set up and we got beat on it, which I wasn't real pleased with, but we did get beat on it just because we played it a little too tight. But that right there was definitely a big one, a big trade for a lot of people. They just put their heels against 50,000 and sold it, and it turned out to be a great play all the way down to 45,000. And now you're sort of rallying back up here, and you have an opportunity probably to return to 50,000 relatively shortly. It just hasn't happened. Thought we may be right there on the 21st of April, right? So there's your high, 49,848. Sort of figured you were going to be at 50,000, but the sellers protected it again. I'm interested to see what happens. I think we make all-time highs, sure, but it's not like the S&P. S&P is grinding higher. All-time highs. Nasdaq, all-time highs. So even though these are, these products are real similar, it's important to understand that they are not the same. Just because they're stocks does not mean they're the same. So something like this was a US 30 look. We had this dialed in pretty good beat on this. This was last year's tariff panic. That spike low all the way up to the spike high. And then there was your pullback right there to 38%, which was 45,121. Pulled back there and then bounced. The war brought about a pretty good correction here in the US 30. Sky's falling. The sky's falling. Well, that's all back. It's all the losses have been erased and then some. A little bit different here for the US 500. You can see this market here did test the 38% level of that from that spike low right there. Right there, boom, actually fell relatively short and then rallied. So definitely the Dow's the weakest of the three. There's no question about that. And there's a lot of reasons for that, probably just the valuations of the big 30. But as far as the US 500 actually being this strong, such a broad-based indices or an index, I'm very surprised. I sort of expected the US 500 just to be a dead fish and move sideways. So if I was trading this intraday, there's no question pushing all-time highs. What I want to do here, I want to buy the market if possible. So US 5, essentially it'll be the same, a real similar trade as that NQ trade. So to execute this, I'd go E-mini S&P 500 futures, just for me because I'm in America. But you could use it on the US 500 as well. And essentially what you're going to be doing is taking that New York range, that daily range, New York range, very, very clear cut. Right there, opening bell, ding, ding on Wall Street. Volumes pick up. There's your big rally. Now we're stagnating and we're sort of creeping down. I love the creep. If we get a chance to bid that late in the day, it's just not a bad trade at all. It's pretty good. This would be one where you could step up to the plate and say, okay, what do I want to get out of this? $12.50 a point. Be looking at, maybe just one unit or one contract. You could do 2 units if you want to play a little bigger. But somewhere right in there is pretty good. It's a pretty good zone. Probably looking for a take profit of what? I don't know. Do we want 8 ticks? Maybe just 5, 6 ticks, something like that. It's a pretty good play. That's not a bad play at all. The only thing you have to be aware of is that if that money's not there right away, you just got to exit. You take a small loss and you move on. You don't go any deeper than a 1-to-1. That's essentially what you're going to need to do there to be successful with this type of trading over the long term. No question about it. Let me see. All right, we got some questions out there. Ralph H. Hey, Shane, is 38% your favorite Fibby? Making me play favorites, Ralph. That's tough. Yeah, 38% is really a strong level, especially when we're looking at a trending market like we are in your U.S. stocks. You start looking at daily 38% and weekly 38%, especially when something's moving directionally. It's fantastic. Probably, I think that 38% and 62% probably equal in my eyes. I like them both, but 38% have just been. If you want the big money trade, the big money trend trade that's gonna, you go buy a truck or buy a house or something after you win it, you're probably gonna hit that on a 38% because that's gonna give you an opportunity to get on a real hot trend like that trade in the Dow, that pullback that happened last month in the Dow. Bounced right within a few hundred points. It bounced right off of that 38% level on the monthly and just really gave us a great idea of what was happening with market dynamics. That's for sure. All right, let me see. Eli, look at AMD, NVIDIA, and Samsung. Those stocks are booming. Yeah, we'll pull some stocks right now. Good idea. Samsung ticker is 005930, and they're leading. Right on. Okay. We'll look at them right now. Kelvin, what are you doing, Kelvin? What are you explaining now? We're talking about tech. We're talking about stocks and how we see incredibly low consumer sentiment out of the Michigan index, and then we see stock markets pushing all-time highs during a war. So it's sort of we're trying to figure out the dynamic of what's happening here in front of us, in front of our eyes. Some of it's inflation. That's why stocks are high. It's just the way it is. The dollar loses puff. Stocks and really everything goes up. That's part of it. But there's something else coming, and this AI boom is really taking the NQ and the Nasdaq to new heights. No question about it. So that's what we were looking at, Kelvin. Welcome. If you have any questions, be sure to ask. And what about the IPOs? Yeah, the IPOs from OpenAI. I mean, this is it. I mean, these IPOs between Anthropic and OpenAI, those are going to be probably some of the biggest IPOs we've ever seen. They're going to be absolutely huge because everybody's going to want a piece of these companies, and I'm curious to see exactly how they pan out. You see right here, we haven't had them yet, but believe me, this time next year, there's going to be all sorts of pricing data here for OpenAI. All right, let's go ahead and take a look at AMD. We got a few requests here for some stocks. I mean, there it is, right? So what happens here? Why the gap? Why the huge gap? Well, we can check our news. Stronger AI-driven demand center CPU demand. Davidson upgrade. We've got earnings right here. Earnings are due out the 5th of May. That's a big level. This is a gap, no question about it. AMD, as far as I'm concerned, people saw that new release. Goes right back to what we just talked about, everybody. The acceleration. It's not necessarily the ChatGPT 5.5 or the new Anthropic, the new Claude version. It's not necessarily that these are going to be the final destination for AI. It's that everything is ramping up in velocity. The velocity of the technology is getting to a point where you're either going to get on board and go with it, or you're going to get out of the way. And right now, you see exactly right here. This advanced, if you're talking about chips, you're talking about processors and things, you're going to need a lot of them because the way that this industry is blowing up right now and expanding, you either get on or you get turned under. So this clearly, I mean, it's almost a panic play. It's almost a panic play. But this all stems from projections coming out of the AI development and what is going to be necessary to really drive this innovation forward at the rate that it's being driven. I mean, it's almost philosophical in a way. Sit around and start thinking deeply about what AI really is and where it's going. All I needed to see was that this new version is supposed to make its own gravy, and they built it in 6 weeks. The velocity of technology is increasing. No question about it. So AMD, you got a gap level right there. I mean, I think that I wouldn't be buying anything right now if I was going into this AMD. Fibonacci's right there, 38% right in the heart of this gap, maybe 62% down on the downside of this gap. Remember the rule, gaps get filled, gaps get filled, gaps get filled. That's a bona fide gap right there from the low of 334 all the way down to this high, which is right around 310. So 334 to 310. I mean, I could clearly get excited about buying 315s, and you might get it. You really might get it. I mean, that was a euphoric pop today. No question about it on AMD. So good stuff, good spot there for sure, Eli. Let's see, NVIDIA. NVIDIA is sort of the darling of the whole thing. When you start talking about who's going to be in a position to win, we could argue that NVIDIA has already won. But, I mean, there it is. I mean, look at these formations. Realistically, look at these formations. They're so incredibly bullish that if you're playing chart patterns, I mean, this is it. This is a clinic on a bullish flag. Take a look at this. Boom. There's your trend line. Bullish trend, right? Flag. Bullish flag. Run, rotate, 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 break. To put it another way that I use on my intraday charts. Something like this. That is a P formation. No question. Run, rotate, break. Incredibly bullish. Those formations are incredibly bullish. So let's take a look at earnings. When are earnings out? A little bit later, 20th of May. You're looking at about, 1.743, estimate of $78 billion. So the earnings expectations are large for NVIDIA. No question. We will reach a point of diminishing returns where all of a sudden the expectations are so high that what company could possibly reach them. We're getting there, but we're not there yet. We're not there yet. And in the room for the AI boom to the top side, just nobody knows. And players like NVIDIA, players like AMD, these are going to be the winners. Take a look at this, though. Monthly chart, double top, no question. High right there, 212.19, 211.34. Went up there and took a look at about 211 today, 210.95. So if you're trading NVIDIA, I mean, it's very similar to what we were just looking at with that level in the Australian dollar Kiwi. Market dynamics are market dynamics. And when you have a level that's just being hammered, one test, two test, maybe we pull back from here in April. Maybe we pull back for NVIDIA, and then in May you get the big break. Typically, when you see somebody knocking on the door over and over and over, eventually they kick it down, and then that's when that's when things really get fun. Huge month for NVIDIA, no question about it, 20%. That's amazing. That really is amazing. Clearly not a lot of angst about those helium videos we made, about helium really wrecking the flow of superconductors in the world, or excuse me, semiconductors, not superconductors. Crazy stuff, guys. Crazy times. All right, Samsung. Let's take a look at Samsung. If there's any other markets you guys want to look at, feel free. $005930. There it is. Same basic formation. A little more compression here. Interesting. Compression, break. Didn't quite get the big gap up today. Pull back, break. Yeah, sort of a W. I mean, it's not a Bollinger W, but it's a W formation. I don't know. I kind of like the other ones better. I like that double top in NVIDIA. I think that could be very tasty if we do break up above that. That's something there. That's very, very interesting. No question about it. Let me see. Crude oil has a gap on the 4-hour chart. Yeah, we got to talk a little bit of crude oil before I sign off today. There is an event that came out that we do need to see here. Let's go ahead and see if I can find it here real quick. All right. Let me see Babgees. I remember Mark Cuban. I'm not a big Cuban fan, but he made a fortune, so God bless him, I guess. Let me see Cuban. Years ago on Shark Tank, always mentioning that he is looking for companies that make software, that make the software, then program themselves. I thought it was a pipe dream back then, and now it's reality. Yeah, I mean, the hardware, the idea really does go back. It's a historic idea. He's not inventing anything there. That's not a new idea. It's one of the things that we always talk about. Is it better to get in on the gold rush, or is it better to own the saloon in town where all the miners spend their money? Well, think about it. You know, what side do you want to be on? Do you actually want to be in there building the AI, building the software, building the data centers, or do you want to be the guy that's selling the chips and the semiconductors to the people that are using this stuff? You know, do you want to be the cattle rancher or the meat cutter? Do you want to be the guy that cuts the meat or the guy that raises the cows? Most cattle ranchers will tell you that the meat cutters are the ones that are rich. So it's a good point you're making there, Bab. I mean, it really is. Do you actually want to be in on it, or do you want to be supplying the hardware needed? Personally, I probably would rather own the saloon in town than go pan gold all day. That would just be me. But, to each their own. Everybody wants to do something different. And there's a tremendous upside for these companies, NVIDIA, AMD, all of them. I mean, even Samsung here. I mean, anybody that's related to this industry is going to crush it as it expands. It really is. Until we reach a point of diminishing returns. And then you'll have to see these companies merge to stay alive, and there will be all sorts of shortages of commodities and things that really are the only thing that will limit AI, because clearly the computation power and the technology there with regards to just being able to process information and build things, we have no idea where it's going. It's in its infancy, and it's getting big fast. That's for sure. Let me see, Kelvin. Good to see you, Kelvin. On an orb strategy, why do you use the first two candles and not the very first candle? It's a great question. I use it for confirmation. So let's go back to our NQ, which I believe this is going to be a pretty good trade later today. But let's go ahead and just get rid of all this stuff. We're not going to get this during this live stream. So if we go to a 15-minute orb, the reason why I would do that is to try to stay away from being faked out. So like, let's say right there's your opening. So there's or candle 1, candle 2. So if I just go with candle 1, 15 minutes, in my view, we're still noisy. I want to see that second candle as being a confirmation device. Now, if you want to play real short time frames, I don't advise doing this, but I've seen a lot of guys on YouTube doing this, and they swear by it, but I don't really believe anybody. So they're using 5 minutes and 1 minute charts to do these opening range breakouts. Could you do it? Yeah, you could do it. I mean, this right here essentially is going to be, well, it's going to be your 2 bars right there. Let me do that again. That wasn't very good. Right there, volume spike. It's always pretty obvious when the market opens. You can see a big volume spike. So that would be your 2 candles there on a 5 minute chart. The biggest reason why I prefer 2 candles on, say, a minimum of a 15-minute chart is going to be volume. I want that range established when the volume is at its highest point. And if I only use this one, okay, you're going to have probably the most volume coming in that first 15 minutes. But it's kind of arbitrary when you think about it. What makes the first 15 minutes special? Opening bell, ding, ding, all the participation runs in. Okay, great. But how long's long enough for that participation to settle? I mean, if we're in a hurry to get into the market and you don't want to wait around for another candle to confirm, then this is easy. You just go to a 1 minute chart and you say, okay, that's a ton of volume, 2 minute orb. Boom, there it is. 1 minute, 2 minute, and then you just look to play the break. The problem that you're going to run into with this, and I'm just going to tell you this ahead of time, is that this 2 minute range, as volume dries up throughout the day, you still have a significant risk on the board. But what don't you have? You got some chop. Right there, you're long, you're established, and the market just pulls right back down into really your range. And you're going to find if you go down to, say, a 1 minute or, say, a 5 minute, that's going to happen more often than, say, if you use a 15 minute or a 30 minute. To be incredibly blunt, the only thing that really drives an orb strategy is a breakout day. So today, you got, 1.79% on the Nasdaq. Let's go to a 30-minute orb, 2 minute orb. 2 bar orb. Has anything really even happened today? Opening right there, opening bell, ding, ding. So there's your 30. There's your open. There's your second candle. There's your break. Is that different than a 1 minute? One minute chart. There's your open, right? Somewhere in there. Open. Boom, boom. Get chopped out. Got chopped out. So if you play it super tight and you go down to 1 bar or you go down to these really small time frames, you know, you potentially you could make some money if you just brought your profit target down in here. But the whole point of the orb is to get in on a break and get significant moves. You want to get bigger moves. And if you want to scalp using an orb, you certainly can. But what I would say is instead of cutting it down from a 2 bar orb to a 1 bar orb, I would just cut it down to a shorter time frame. To me, that would be the way that I would get involved. That way, at least your risk is going to be a little bit smaller, because if you go to a 15-minute, let's say to a 15-minute, yeah, you're going to have a range, but the confirmation is really what I'm concerned about. Something like that. So that right there, opening bell, ding, ding, there's your 1 bar. Guess you got in right there on the break. Maybe it's worth looking at. Personally, I use the second bar because I want to see volume. Number one, volume is going to decrease into the second bar, and I want that range. I want the opening, that opening volume spike, and then I want the confirmation. Essentially, that's what I'm thinking, Kelvin, on that. But, you know, you don't have to. There's all different ways to play orbs. A lot of people wait for the first hour of trade to be done, and that is their orb. They're not even looking at candles. They just have price points, and that's going to be the range. They play a breakout out of that range. There's nothing wrong with that. You just got to manage your risk and be sure of what you're doing and be consistent with your management. That's the biggest thing. 15 to 30 minute looks better, Eli. I like the 30 minute. That's my favorite. In order to do that correctly, you have to dial your leverage down though and play it a little bit looser than some of the shorter time frames. That's for sure. Smaller time frames makes for more precise timing, which is more difficult. Well, you just run into chop. essentially you run into chop before the market breaks. And think about it. You're going to find that, like, say you go to a 1 minute orb, there's a very good chance you're going to get chopped out in that first hour of trade, and then the market maybe makes its move later in the day. So you want to avoid getting chopped up as much as you can. For me personally, I'm not a big fan of the ultra tight time frames like this NQ. I mean, look at this. We took this trade, and then look, this sell worked great on the 1 minute, and now you're on a buy. I mean, to me, it's just too dang hard. Why not step back and do something like this with a 5 minute? You know, get a move, catch a move. That's sort of what I'm talking about. So that's what the orb's designed to do. But you guys take these strategies, build them into anything you want. Find something that works. That AI, I'm not kidding you. I was doing some stuff on it last night, looking at some different range numbers that I do. And the capabilities of the AI to help you code anything you want and put it on your platform and do back tests, rigorous, in-depth back tests, is unbelievable. Like the second and third time price touches maybe a horizontal support and resistance level, what is the percentage that it wins? What should your stop losses really look like? Taking a sample set of 1,000 trades, what are the tendencies of those trades? You put it in the AI, it recognizes it immediately. It's truly a game changer for us traders. Something I'm really excited about. I don't really know what the ultimate implications of AI are going to be. I got a feeling they're not going to be overly positive for the human race, but they're what they are. It's here. You might as well just get on board with it because it's not going anywhere. All right, a couple other things we need to cover, and then I'm going to go ahead and sign off. It wouldn't be a party without crude oil, so we got to talk some crude. WTI crude oil is interesting because we get a number every Friday that shows us what we're doing in North America with our oil rigs and our total rig count. So Baker Hughes rig count was out while I was talking just a minute ago. We were looking for, last week. This comes out every Friday, Baker Hughes oil rig count. 410 rigs last week. Total rig count was 543. And you can see that this trend is sort of fascinating. We are very, very low, very, very low levels compared to where we were just 3 years ago. So we aren't seeing a big influx of new oil rigs, even though we're seeing a lot more oil get to the market here in the United States. And that's a function of the big investors and the players aren't really sold on this, on things really panning out. They're not sold that the crude oil is going to stay at $100 forever. Sort of a bullish type of a thing if you're looking at the Iran situation. If you want an answer, we should have seen a spike in new crude oil rigs. We should have seen a spike. Didn't see it. Check this out. Here's today's figures right there. U.S. Baker Hughes oil rig count, 407. 407 down from 410. So we've got crude oil at about $100 a barrel, and nobody's drilling for it. Production's up. Oil stocks are up because we're tapping all the existing wells, but new wells, that money is not going into the new investiture to build the new oil infrastructure. It's fascinating. That means a couple of things. Number one, it means that we do not believe this Iran war is going to go much longer. And after it ceases, we built the case for bearish crude oil yesterday. So right there, 407, we actually fell three oil rigs, and then the total rig count is up one rig. That means that natural gas more than likely got more rigs built. The reason why, they think that natural gas is going to fuel the AI boom here for the short term, at least until nuclear comes online. More on that. Stay tuned. So this is our U.S. oil chart. Spike low there, spike high, pullback zone right around 79.50, and then a nice big bounce of about 93.25. That 62% level was money in the bank. I mean, I guarantee you that's where the institutions bought. As far as what could we do today maybe, in the short term, maybe going into Monday, well, this is pretty good stuff right here. Good market structure. Nothing really wrong with maybe playing a daily pullback maybe from this type of play, something like that. Spike low to a spike high, 38%, it's 91.21. So probably 91.25. Be a pretty good buy, 91.25, somewhere right in there. But a nice pullback down here to 62%, where that converges with our monthly, I believe that's our monthly 50%, right around $87. That's a pretty good bid as well. As far as what could happen to oil, if you do get a peace deal or a deal signed this weekend or something that suggests the ceasefire is not going to end and the Strait of Hormuz may be opening sooner rather than later, we could be in a position to see a major sell-off in WTI crude. That being said, the flip side of that coin is if the war escalates, if you start seeing terror attacks in the Western world, if you see an attack on an oil tanker and maybe one of those is sunk, if you see armed incursions, meaning the United States military decides to invade Iran, either at Karg Island or somewhere in the Strait of Hormuz, then oil prices will absolutely explode. Still very bullish here, crude oil, but we can start to see that maybe there's a light at the end of the tunnel. And rest assured that no matter what you hear in the media, when this war is over, given the current levels of production out of the United States, as soon as the war is over, there is a very real chance that crude oil will plummet. And I'm thinking 68. I'm thinking 68 for WTI. I'm thinking 75 to 77 for Brent crude. We're watching it closely. We're not there yet. Still very bullish. And if the other shoe drops, if you see escalation, we go to 110 immediately. No question about it. Absolutely no question. But there's reasons to believe that this thing's winding down, and we're seeing it all over the markets right now, all over the markets. A lot of optimism there. Oh, I didn't even talk about the VIX. The VIX is down to about 18.5. So the risk sentiment is definitely fading. We'll see how it goes. That's for sure. Let me see. All right, we got a question over here. 512 Eli. Do you think AI can replace retail traders? There's no replacing me, Eli. To answer your question, AI is going to change everything. There's already AI traders, AI robots. Would they ever replace retail? I don't think so. I mean, as long as you want to show up and trade and make money, and I want to show up and trade and make money, we're going to be there. The idea that the AI makes the market so efficient that we can't make money anymore, is that possible? I don't know. I think as long as price moves, we're going to be able to do things that can help us make money. I'm a firm believer of that. The thing that I really want to focus on is not necessarily will AI replace me. What can AI bring to my trading? And I mean, I was actually just pumping some of my results, some of my graded trades, and all my thousands of them. I mean, I was just showing screenshots of them to that GBT model last night. And it was giving me tendencies, immediate tendencies about max adverse excursion, things of that nature, things of how long should I really be in the markets? And it's all about improving your performance. I mean, I fed it just a bunch of trade results. And I said, hey, come up with some tendencies and tell me what my best stop loss is. And it comes in and it gives you a good look at, okay, well, right here, here's a problem. And here is really what's happening with your trades. How is price behaving after I'm getting in the market? Because that's what I want to know. I want to know the tendencies, and I know them intuitively. I know when the market goes against me immediately, I'm probably in a bit of a compromised position. But the idea that it can tell me exactly how far it goes before I have to get worried, or better yet, what I'm trying to build right now, and I want something concrete that potentially could be automated, is how much time are we talking about? Do I realistically know if I'm sitting on a loser 10 seconds after I take the trade? Is there enough data there to give me some broad, not even broad strokes, but some real precise insight into, Shane, your gut is right. What I'm trying to do is back up my gut feelings. That's the bottom line. I have a pretty good idea when I'm wrong. I want to see if the numbers bear that out. And if the numbers bear that out and the AI can help me cultivate data sets that you just can't cultivate without it. I mean, listen, I've done where's my papers at? I have a whole room full of reams and reams of papers that I've done hand-tested back testing. It's limited. You can only go so far. But the AI can do everything. It can tell me how many times a level is valid before the percentage of it succeeding diminishes to the point where you just don't take the trade. It can tell me to play a breakout. Should I go definitively on the first time or the second time or the third time? It can tell me with my entry points. I talk about a shade when I want to sell. Maybe I want to sell hundreds in crude oil. What's the proper shade? Is it 99.91? Is it 99.89? It can help you learn all of that. Our crossover strategy, it can 100% tell us exactly where our stop loss needs to be. No question about it. All we have to do is have the data to feed in there and the parameters. It can do nearly anything. It really can. And that's why I've talked to a lot of traders. They're scared of AI. Don't be scared of it. Lean into it. Now, don't share any personal information on there. And you don't need to be putting your proprietary systems into AI because it's not secure. There's no way that it can be. But but it can help you fine-tune your strategy and maybe build other strategies that previously it just took too much time and energy to do. We're talking about taking projects, research projects that would take you years, literally years to do, and maybe turning them out in a month. And I'm talking about deep insights, deep research. Okay, I'm looking for a system that performs well on crude oil, sure, but what happens when we put it on different time frames across all the markets? Where does it perform? Do we have any insights? Can this system be applied to stocks? Things like that. Those are the questions. Velocity. Can we measure the velocity of price and have an understanding of when a market is most likely to continue a trend as opposed to reversing out of nowhere? You can do anything with it. And it's just getting started. So I'm excited. There's going to be a sweet spot in here, Eli, where you're going to be able to use AI to get an advantage. Now, the question is can you ever have an advantage over AI? Probably not. But if you're smart, you might be able to run with the AI and make a little bit of money in there. That's what we try to do with the institutions. We try to figure out where the institutions are and swim with the river, not against it. I can see the exact same thing happening with artificial intelligence. Figure out a way to get on its coattails and swim with it for a while. I don't think there's any reason to fight it. You're not smarter than AI. Nobody is. It's artificial intelligence. It's the sum of everything we've ever known that's online. And now we're just talking about different ways to filter the data and create new products out of existing data. And then that becomes a feedback loop. So now you're creating new things and new constructs, and now this computer's taking those things and it's just building it until it's just a runaway train, which is where we're basically at. Is it scary? Yeah, it's scary. Is there opportunity there? Hell yes, there's opportunity there. I don't understand all of it, but I understand the markets, and we can shore up a few things using AI. I'm excited about it. I think it's going to be a good thing. I really do. So something to think about there if you're interested. 512. I screenshot all my trades. Should I start using AI? It depends on what you want to know. I mean, I had a very set. My thing is this. I'm still angry about that gold trade last summer. Didn't break the bank, but it was an outlier. It's what you call a fat tail, not a fat tail, but a thin tail loss, something like that. It's something it's such an outlier that I want to know exactly how to avoid these outliers without compromising my profitability. So for me, it's more a question of how do we get rid of the unknown unknowns? Is there a way that I can use AI to filter my data to help me get rid of the unknown unknowns? Because the obvious answer is, oh, well, you took a huge loss there. I go, yeah, but it came out of nowhere. Okay, it was an unknown unknown. What happened? How can I avoid that moving forward? And the answer is I have to have some insights into the market. I have to have some insights into exactly how I'm trading and what my stop parameters are looking like, because the obvious answer is just to cut all the trades off. Well, just put a standard stop loss, just exit the trade after a minute if it doesn't work, or exit the trade after 8 ticks if it goes against you. That won't work in the long run because you're going to cut off way too many winners. What we've got to do is we've got to figure out how price behaves after we're in the market and if there's some tendencies there. And if those tendencies can be quantified and potentially automated, man, it blows the lid off of everything. I mean, it takes you to the next level as a trader. And to me, I'm always looking to level up. So something to think about. Yep, absolutely. Opportunities are taken, not given. So it's up to you, Eli. If you want to use the AI for that to show them a trade, I'm going to show it some. I'm going to take some screenshots of pictures of trade setups, and I'm just going to ask it. I'm going to go through and ask this version, what do you think? What do you think about this? What's the best way to trade these levels? And I'm just curious of what it'll say. Maybe it'll give me an idea that I hadn't thought of. AI is an asset. It's not a curse. Now, when it comes to cybersecurity and things, and I don't know. I mean, I don't know how we're going to keep the computers from hacking everything. I really don't. But that's a different conversation. For trading purposes, it's a valuable tool. All right, guys, I've rambled on long enough, but this AI stuff is big, and you're seeing it in your markets. I mean, the Nasdaq's up almost 2%, 500 points, 27,250. I mean, we're really on the march here. The U.S. dollar, I didn't really talk about the dollar today. It's off about 0.25%, relatively flat. It's been flat for a while now. But big tech has been the story of the day. Bitcoin, we didn't get our trade at 83 or 82.50. Still might get it over the weekend. Watching the news cycle closely. If we have any peace, if anybody makes some peace, then we'll be here to report it. If the war does escalate, they'll be ready for crude oil to go north in a big way. If you do see a bombing, I feel like this thing's winding down, though. I really do. Okay, guys, I'm going to go ahead and sign off for now. We went way long today and sort of gave you my philosophy and outlook into AI. And I think that embrace it. Don't run from it. Embrace it. There's no point running. It's faster than you. All right, everybody. Have a fantastic trading session. Have a fantastic weekend. We'll be back next week on a regular schedule. We've got some key things coming our way, and I think we're going to have an opportunity to make a few bucks. All right, everybody. Until next time, have a fantastic trading day, a better weekend. And as always, trade the action well, and we'll talk soon. See ya.